Hello everyone. One of the questions I'm asked most often as a consultant for SBA loan due diligence is, what type of report do I actually need for this transaction? Well, the answer is, it depends. All sites and environmental risk scenarios are different, as are the related reports and required due diligence. Unless a bank policy directly stipulates it, not every site requires a comprehensive Phase 1 environmental site assessment report. Depending on the value of the loan, the property type, and your risk tolerance, your transaction may even allow for a limited scope desktop report. Let's go through all the tiers of SBA due diligence from lowest to highest deliverable cost. For sites where the past or present uses did not have a NAICS code match, which is used to identify environmentally sensitive industries, and where the SBA loan request is of $150,000 or below, a detailed environmental questionnaire can be completed by the lender and signed by the owner-occupant. If the owner-occupant does not sign the environmental questionnaire, then you must start with, at a minimum, transaction screen assessment. For loans above $150,000 that do not have a sensitive NAICS code, the environmental questionnaire completed by the lender is required in addition to a record search with risk assessment. The record search with risk assessment, or RISMA, is done by an environmental professional which probes the current and historical use of the subject property back to 1940 or first developed use. This report will determine environmental risk and recommend either no further investigation or Phase 1 environmental site assessment. The next step beyond a RISRA is a transaction screen assessment involving a site visit by your environmental professional and a completion of a transaction screen specific questionnaire. It is the lowest level report that requires a reliance letter and a certificate of insurance by the SBA. TSAs identify potential environmental concerns or issues, and its recommendations can include a Phase 1 ESA or a Phase 2 subsurface investigation. Last, there is a Phase 1 environmental site assessment, or ESA. The Phase 1 ESA is the most comprehensive of reports we've gone over and will typically include site reconnaissance, interviews with local and regulatory agencies, a historical review, among other inquiries. ESAs are performed to permit the property user to satisfy one of the liability limitation requirements set forth by the EPA. The ESA can identify a broad range of recognized environmental conditions found, and recommendations may include no further investigation, business environmental risk investigations known as BERs, or possibly perform a Phase 2 subsurface investigation. If you decide to perform a tiered approach, please check with your consulting company to see whether they offer a full credit of a fee paid to be put towards the Phase 1 report if warranted. To learn more about a tiered approach to SBA environmental due diligence, Partner has a flowchart and NAICS code cheat sheet on our website. We would love to be your partner in navigating your next SBA loan, so please do not hesitate to call.